Welcome, Karen and Dan. How's it going?
Hey there, guess I gotta turn off this crazy impeachment thing, huh?
Oh boy.
Oh my gosh, what a show.
Yeah, a lot of footage on that. Hey Jerry, how's it going? So where are you at now, Karen? Are you back home? Or are you still traveling?
Oh, sorry. Yeah, no, I'm in Tennessee.
Oh, okay.
The other place, yeah.
Nice.
Hey, Jason, how are you?
Hey Jerry. Hey Dan, how you guys doing?
Good, thanks.
Hey,
Excellent.
nice to see you. Nice to talk to you.
Yeah, good to hear from you too. Well, let me pull up the SPY chart.
Yeah, what in the world just happened? Bam.
Yeah, there's routers came out saying
Reuters.
Reuters.
What? Oh, yeah, bunch of hillbillies.
Gosh,
I knew he had that wrong.
it's an Albuquerque thing going on.
They came out and said phase one trade deal may not happen this year at all.
Oh, no kidding.
So,
Yeah.
Break.
Big check.
yeah, I was a little surprised that we didn't have more of a sell-off with that Hong Kong bill being passed and all the upset tweets. And I guess during the live stream, right at the end there, we got that little sell-off, but it's trying to climb right back, isn't it?
Yep. Yeah, I'm trying to take advantage of it, but you didn't know that.
And pushed our TLT up even higher. So
I bought some.
yeah, you got your TLT. Good.
I hate to tell you, I did a bull put spread on the SPX, but you know, I'm not supposed to say that. But when I saw that, I said, "Oh, that's garbage."
Oh, fun. Cool.
We'll see.
Yeah, we'll see. I think it's ready to sell off pretty hard here. So
By when? You think right away?
I think any sell-offs right now would be short.
Mm-hmm. Okay.
So yeah, just looking at this crash right here was from the 10-year yield hitting 3%. And as soon as banks see a guaranteed, if you think about 2% inflation, 3% yield, they will leverage into that with every penny they have. So that's when we saw, and then we had the Fed saying they're going to keep hiking the rates. So that just
that was what I think did it back then. Was really was Powell, and then bam, all bets were off. But that's different now, is it not?
Yeah, well, so they've been doing that all year though. So it's really when the 10-year yield, when the yield gets too attractive, the banks sell the stocks and buy the guaranteed profit.
Okay.
So we don't have that problem at all right now. So right now, I think it'd be a short-lived sell-off in proportion to the bad news. So it'd be we'd go with the flow for a few trades, and then look for technical levels to go back long right now on the SPY. So, but yeah, for our portfolio, this is great. I was thinking we'd have some weakness. We got it. Got to push in the TLT. So the portfolio is working very well for us in that perspective. But yeah, a little bit, but it is trying to climb right back up. So they need. I don't think it's going to sell off too hard until we really get the tariff threat or a delay. If they push this to January, how patient will the market be at these elevated levels? Hard to say.
It is hard to say because between the some of the retail stuff that came out, some strong, some not, but most of it is pretty strong. Christmas rally, here we go, and then here comes January and everybody repositions and boom. So they all get their little bonuses before the end of the year, because I think a lot of these managers are behind the 8 ball.
Yeah.
And then
yeah. Yeah, yeah. Well, right now it seems like the bond plays, throughout the year we've had periods where I tell you guys I'm really confident on one asset but not the other. So once the phase one deal came out, I was highly confident in the SPY, and that paid off well for us. But now I'm not confident at all in the SPY, and I'm confident in the bonds. So it's been going back and forth. And but yeah, I mean, we could have a pretty vicious sell. We've seen some vicious sell-offs this year without the proportion of the bad news this time is probably going to be greater than what we saw in August. So in August, we were talking about a 5% tariff hike in October, which got delayed, and then a 15% tariff on some $300 billion in goods on December 15th. So I think the second the market hears we have those December 15th tariffs going ahead, that we'll get a really nice sell-off. But I think it'll be short-lived at this point. And we'll see that TLT scream higher.
Good. That, in my case, would be a recovery.
Yeah, because you jumped into TLT a little later in the game, huh?
I sure did.
Okay, well, it's okay. We're in this for the long run.
Yep.
And so, Dan, you just got started with the TLT, right?
Yes, I did.
And you're the one who'd only traded the SPY for the last 5 weeks, right?
Yep, that's me.
Oh, cool. Yeah, Dan was sending me in his stuff. He said, "Well, I wonder how well this will do in a down day." I said, "Well, you better buy the TLT, buddy." So good timing on that. You
Yeah.
have the 2-to-1 ratio?
I don't.
Okay.
Oh, I'm sorry. When you say 2-to-1 ratio, I think you mean 2 times. Yes, I have the 2-to-1 ratio.
Okay, good. And so the only reason why it's 2-to-1 is because the TLT is about half the price of the SPY.
Yes.
And so the general idea is the market has this little ping pong match with itself where it bounces between the bond market and the stock market.
Yeah.
And so if you had just blindly held the TLT and the SPY, the famous ratio that people push, all your Morgan Stanley investment advisors, they tell you the 60-40 ratio. And so 60% equities, 40% bonds.
Right.
But they're going to just buy and hold it. They're not doing all the protection we are with the options. But if you did do that, you would have cut the maximum drawdown of the last 3 large crashes in half. With our setup being more of an equal weight, plus having the put options, we actually make extra profit usually when we are positioned for a down move and catch it, which is exactly what we were set up for right now. So this is actually exactly what I was hoping would happen. Okay, cool. Well, let me jump in today's content. We'll see if we have any questions. I don't have a whole lot of new stuff compared to the update today, but I'll just go through it. We figured out a clever way to make the video covers a little more interesting to look, so you can kind of get a preview of what news I'll cover. So I'm pulling out the best 5, so something to note on that. We have been providing a lot more data in each update. So now you have that given trade links to all the previous posts if you want to go back in time and look at those. I'm keeping the asset allocation up here up top. I had found some people were not seeing when I was slightly adjusting the numbers, so I put that in there daily. And this I found to be really useful for me. It's a little bit of a pain in the butt, but I'm literally going into the spreadsheet and updating the current value of the short call and the long put every single day, and then recalculating, then just re-screenshotting all our profits so that we know every single day where we stand. And this also doesn't allow me to not look at every single position for more than 24 hours. So I think it's a good little task for me each day. So I have all our open positions here updated daily. And this was when we were at 140. So we threw on another, I think, 30, 40 cents onto that. So that's good. But on the other hand, we have the 43 put on emerging markets. So we're protected to the downside very carefully on the SPY and emerging markets. So that paid off. We're not seeing gold move too much, but I think it will once there's a little bit more of a panic. And we're seeing the TLT move up with the SPY this morning. So that was confirms this whole rest of the world's trying to flee their emerging market indexes and currencies, and are flooding into the US. So that trend's continuing. Let's see, here's our total return. So I'm updating this daily so you guys can keep track of exactly what's going on. But I think we just probably popped into a profit for November with that move today. So it's been a tough few months just because, one day we got a trade deal, next day we don't. And depending on whether we have a trade deal or not really makes a huge impact whether we want to be positioned to be long the bonds or long stocks with the overweight part of our portfolio. The SPY is doing well. I might do an inverted collar Friday if we see some more downward pressure between now and Friday. So we'll see. It does seem like the market's ready for a sell-off. But we'll just have to see if we get a Trump tweet or what to give more positive optimism. I don't see the trade deal happening now. So I think the SPY will go back below 300 pretty quickly and reprice and then stabilize. So I'll be looking at probably mainly Charlie McElligott is the main guy I like to listen to for finding price levels. And one of the daily dumps from which we mailed out Monday, it's a great interview. And he's become pretty famous for picking these levels where the market will move to. And in the interview, they're saying, well, hey, these CTAs, none of them say that they have these. Hey, Oscar, how's it going?
Hey, Jason, how are you?
Doing great. How are you doing?
Sorry, a little bit late here.
Ah, no worries. So yeah, all you missed was that, we've been expecting a little sell-off and caught it, I guess, right at the end of my live stream. So our bond position's doing very well.
Yeah.
And I'm tempted to do an inverted option collar on Friday for the SPY. We did have a very premium put option today and yesterday on emerging markets. So we're really positioned very well for this sudden move today. And so not ready to be short equities for a very long period of time. But if this trend does seem like it's getting some momentum by Friday, we'll probably go with the flow come Friday. So potentially look for an inverted option collar on Friday.
Yeah, it's flirting with coming back up again, just so you know. I don't know if you've been watching it, but I have as you've been talking. it's flirting with SPX is flirting with 3,100.
Sure, but
again.
but the hope for a trade deal, I think, is now vanished. So
Yeah.
I think it'll reprice below 300 pretty quick.
Yeah. Okay.
So there's a guy named Charlie McElligott who you guys should have had the interview to listen to on Monday if you're in the boot camp. And so the interviewer is Eric Townshed, and he's a great interviewer. He's not very good at predicting the markets, which is funny, but he does get these great lineup of speakers. It's really the best podcast by far out there. And he's saying, hey, you keep putting out these daily numbers where CTAs will buy or sell. And, he's doing all this research saying, well, none of these CTAs have a magic line of where they will buy or sell. And he comes out and basically said, it's a very complex thing, but the bottom line is that it's a change of volatility that triggers a lot of people to buy or sell. And so he's calculating if the price were to change from today's price to that level by a certain date, that would represent an acceleration of change of price that would cause these buying or selling activities. So that makes a lot more sense, and that's interesting. I was always wondering how he was figuring that out as well. So as far as if we do see some more downside momentum, which I'm really suspecting we will, I'll be trying to dig into his daily thing to try to find where do we stop shorting the market and then get long again. And so as far as all the experts out there, that he works for a gigantic bank at Nomura, and that report's only available to accredited investors, but it gets leaked to Zero Hedge quite often. Anytime the market's moving, someone digs that up and posts it. So that will probably be what we look for to try to call a bottom in the SPY if this does get some more momentum. And I think it will, unless we see some progress on the trade deal. But it doesn't seem very likely at this point. But maybe, they're still chatting about it. Emerging markets was our hint over the last week or two that things weren't going the right direction because we saw the SPY breaking into new high after new high, but emerging markets was really lagging behind. Now, it had a great run up in October, but in November it's been really, really weak. So that is showing, and that is also interesting because we have a lot more liquidity, relative liquidity, going into emerging markets, and very little liquidity going into the SPY. In fact, the SPY's been mostly going up on volumes that are more similar to something like summertime, like a half trading day in the middle of the summer. So they're just really putting in huge bid orders right before, in the futures market and forcing it to gap to these higher prices. And usually that's not a very healthy path for a stock. Usually it will find its way back to fill in these price points it hasn't traded at. So we'll see, but looks like stocks have gotten ahead of themselves with these high levels. Bond portfolio, again, we want to be long bonds until we get close to zero. Now they're starting to talk about how negative rates work for Europe. So I think if we see Europe and Bank of Japan, right now Bank of Japan's at negative 0.10. If they were to start flirting with going even lower, that might lead us to believe that the bond rally could potentially go past the zero bound. It's questionable. When's the bond market gonna run for the exit? When we hit zero? Before we hit zero? There's certainly some room at this point. So I think we have a substantial rally ahead still. And let's see, so pull up the TLT. So the move we had this year, I'm just trying to calculate the relative. Okay, so we picked up from rates going from like 3.5 to 2.5. We picked up $35 max, and at current 28 bucks. So I would suspect this could go up at least another $30 before I really get concerned. And that would be with the Fed dropping rates all the way to zero. So we got quite a ride left on the TLT. So that's where we're at with that position. Precious metals, I think we've held on to some pretty good drawdown over the last few months in GDX, but I think it's coming up for its time to shine with a little fear in the market.
No pun intended.
Exactly. Now I am going to, as soon as I get a little time, I want to separate the precious metals from the cryptocurrency. So as we've been, figuring out what works for investors, what I can produce on my end and simplifying it and kind of organizing the tabs, I do intend to pull out the few gold trades we did in the bond portfolio and put it in the metal portfolio. And then I'm going to move the cryptocurrency related trades into a crypto tab just to separate it out a little bit more. And so for those of you who do, so I'm going to try to finish programming that hopefully this weekend. And I may even add another tab for commodities and energy. We'll see. I might build that. I'm working on what exactly will be the unique assets held in our boot camp portfolio that will differentiate itself from what we're already doing and really be an add-on versus just something different. Okay, so that's where we're at with that. Today's trade alert, let's see what we did. We did the so luckily we bought an in the money. We could not have put a better put option on today. It was trading at 311.73 and we bought the 312 put. So that was a lucky move on our end. I was close to selling the 313 call, which would have even protected us a little more, but we would have had no upside potential. So that put is kicking in right now, obviously, to the tune of about $3 minus the dollar we paid. So that's working out well on that. Here's a new guy I started following on Twitter. This is one of the most vocal communist fellas on Twitter. And I don't know if you guys caught these, are comical if nothing else. I didn't know the Chinese leadership was so funny. Okay, so a friendly reminder to American farmers, don't rush to buy more land or get bigger tractors. Wait until the China-US trade deal is truly signed and still valid 6 months after. It's safer by then. And so he's referring to, all right, we might get a phase 1 deal, but even then we still have a phase 2 deal that might call everything off. So there's, a lot of risk in the market. And then earlier, before that tweet, came out with this one. If President Trump believes China's economy is crumbling and Beijing will eventually make decisive concessions, he has to wait until Ivanka becomes president to sign a trade deal with China. Chinese economy continues to grow with strong consumption and people are optimistic. So yeah, this guy is very, very, he tweets all day. And so I'm going to scroll down to, I think this is really the most important chart.
I suppose he's on their payroll too.
Oh yeah, he's a billionaire for sure. Yeah, he's one of the communist leaders. So
yeah, there you go.
yeah, he's top. Okay, so this is the most concerning. I'm not huge on shapes and patterns in terms of trying to predict it, but we can look at this chart, and you can clearly see the downward slope in the German 30-year bond, and that really in a picture tells you everything you need to know about the world economy. It's slowing down rapidly, and we'll just see how negative. The more negative this German bund goes, the longer this bond rally can keep going higher. Now in the U.S., it doesn't have that feel. You can see it doesn't have that downward slope pressure like the German bund does. But I think this is really the best chart to focus on here to get an idea of how China is really performing. So they're clearly slowing down at a rapid pace, a de-acceleration, even though they have this great, supposed 6% GDP. A lot of people analyze it, say, well, maybe it's more like 4.8. But regardless, what's really impacting the world is the change of growth. And that went from 30% 2 decades ago to 14% 5 years ago to 6%. So where will that bottom out? Maybe around 1% to 2% growth for China, because they really need to stop building cities that no one lives in, and just building things that no one uses in general. Have you guys seen this airport that they built? Any movies of it? Let's see if I can find that.
Just the one that you showed us.
Yeah, so they've got this beautiful $12 billion airport. It's, down the street from their other airport that works perfectly fine. But it really just symbolizes what China's been doing. They're building stuff no one wants. And so you can go watch video after video of this great airport, but there's nobody in it. It's empty. So they're desperate to keep this labor force building things, but the stuff they're building is going to waste. And that's really the big problem that we're going to have to deal with.
Is that a Starbucks in the left-hand corner?
Yeah, it sure is. Yeah. Yeah, it's massive. It's beautiful. It's really impressive for sure. But what stands out to me is it's empty. You can go watch video after video. I spend a lot of time on non-financial YouTube channels of people that like to go explore China. And what's funny is their story all started out as, screw their hometown. They want to go be part of Asia, of China. And they fell in love with it. They watched it grow rapidly. And really ever since Xi Jinping came to power, it's all been going sour very quickly, and they're all very upset. But yeah, cities the size of New York, nothing going on in them. They're just sitting there for the future. There's some 50 million houses that are just concrete shells that are cracking. There's moss growing on them, just breaking down over time, poorly built. You're not allowed to sell your real estate unless it's at a new high. So it's just, they have bank after bank going belly up, and they have construction company after construction company going belly up. So I'd love to be short emerging markets. If we put the proper pressure on China, I think that EEM ETF can crash probably about 50% from here. And that'd be a very easy trade opportunity for us. So right now we're just stuck in this, what's going to happen? Once we finally know we're going to, escalate or not escalate, our ability to take on a little more risk will become a safer bet.
Okay, since you just brought up the EEM again, I'm going to ask the question. I did not purchase that yet. I held off because it started to, come up so quickly, and I didn't catch it. So I thought, well, let me just hold off right now, because that was the Tuesday trade was that one that was like, okay, take it, don't take it, whatever. And I've done everything else. So now I'm sitting here thinking, okay, it came back in a little bit. And now I just heard you say what you just said. And I'm thinking, I was going to ask you, should I go ahead and buy into it now? Or should I just maybe hold off at the moment? I know you can put the puts on, but do I really want to do that? Or should I just maybe add to the other positions at this point and wait and see what you might do with Tuesday?
My answer to that question is always going to be, so here's what I'd recommend. If you don't want to take emerging markets, then don't take GDX.
Okay.
So you keep the right balance. Because so gold and bonds are very correlated in general until the bond market snaps. And then that's when gold will skyrocket. Okay. So most, we got our two outcomes. One is the stock market pulls back, pushes the bond market to too high of a level, and we run out of rope. Here, I'll pull up our outcomes here. Don't realize it's never a bad time as long as you have these ratios to buy any of these assets, because I'm always predicting a direction.
Okay.
So we'll make a lot more money when these bubbles start crashing than trying to safely play the top of a bubble.
Okay.
So I can't wait for each of these bubbles to pop, because it'll be far easier to profit, and we'll be greatly outperforming our 1% a month goal.
Because you'll be in position for it.
But for me to try to safely navigate this sort of environment, it's really hard. I'm really happy with their results, because every other day it's different. One day Trump's bashing China
Yeah.
for the United Nations and a world audience. Next day, China's desperate for a deal. It goes back and forth. So right now it's super hard. We've been doing good. I'm really happy with what we've done right now. We haven't been like just a foolish little kid at the candy store with their mouth wide open, just long equities. We've not been generating returns by just being the fool in the crowd.
Okay, gotcha.
Yeah, so if you wanted to make your life easy, I would just do the SPY and TLT. If you want to follow the full program, then do GDX and EEM.
Okay.
But realize we would love for EEM to crash. I would love nothing more than for that to happen, because it would be highly profitable for our portfolio. We can make a lot more money on the downside than trying to, my high target for SPY is like another, now it'd be $20 up from here. But that's what, an 8% gain. But on the downside, these assets need to deflate by at least 50%. And it will happen much faster. So we can make some very good returns. But yeah, let's just review kind of what we're looking at. I'm not sure if I updated this specific one or the other. Okay, so this was our less likely outcome, where we have no pressure from China and we don't impeach the president. And so this is the outcome where
I'm sorry. It's just, and that's inevitable that he's going to get impeached. I mean,
yeah, it's looking like, who knows? It seems like people are losing interest, but it's hard to say. And now Pete Buttigieg is coming up in the top of the polls. Who would have guessed that? When I first started watching the very first debate, my first impression was that they were trying to get Kamala Harris as the star.
Oh, yeah. I think we all thought that. Mm-hmm.
And she just was too angry and malicious that I don't think she pulled any appeal at all. So I wouldn't be surprised if she drops out soon.
Yeah.
Elizabeth Warren, I thought, was too weak to be like a military leader, but she continues to just be that trustworthy.
And she's a tiger.
Yeah, she's doing well with her pitch, but I think people are starting to discredit her ideas, and now we're starting to see her drift. I don't think old Joe's going to have a chance once, if all this scandals he's involved with really comes to light. Plus, Obama wouldn't even endorse him.
Well, that was the key, right? I mean, that was kind of self-evident right from the very beginning. I mean, that was absolutely hands down. I can't even believe that he even made an attempt. That was a joke. Sorry.
Yeah, right.
I just,
the
obvious is the obvious. I mean, come on, people. Stop wasting everybody's time. Yeah. Yeah. There's there was a reason why he was there. It was pretty clear from the very beginning there. Yeah.
Oscar says Buttigieg has no African-American support. Yeah. Meanwhile, and I've been watching this just for fun. You guys seen Kanye West's Sunday service?
Yeah, sure did.
Oh man, well he's a great rapper, so that's growing.
Not my cup of tea, but hey, I'm too old for that stuff. But any revival that has anything to do with the Christian foundation, since we are founded on Judeo-Christian principles, great. If it's legit, go for it.
Yeah, no, he seems all out about it. Okay, so let's go through our outcomes. So this is, okay, why would this possibly happen? Well, let's push off the impeachment. Right now, it doesn't seem like the Senate would vote him out. So that the House could go do all the charades, cause some drama, sure. And we haven't even talked about Bloomberg, who might be coming in here, or Hillary Clinton. So yeah, let's just put that off. Let's just say we get our phase 1 trade deal delayed sometime into next year, and we can make phase 2 drag past the election. Probably not really what China would try to force as the outcome. But if that's the case, my expectation is the SPY will go up at a faster rate than the TLT. until we get hints of inflation. And then you get your bonds to sell off, driving stocks even higher. And then we get back to, let me pull up my chart. We get back to a setup like 2018. And so at some point, the yield on the bond gets too attractive. The forecasted return on the stock market becomes too unrealistic. And then you get your, oh wait, no, right here is where I was aiming. Yeah, right here, sorry. So, wait, the hell? There we are. So yeah, I think this is the less likely outcome. But stocks go up, inflation starts to become a problem, and your bond market sells off. Your yields get too attractive, and you get the opposite stocks. So you kind of have your tug and pull between the stock and bond market. And then as this is all happening, money's getting out of these assets into the real economy, pushing inflation. And we finally get to rising interest rates. One way or another, rising interest rates and inflation are really what causes major change in the world. And so I don't think that's our most likely outcome. But with some panic and pressure, this really speeds up the whole timeline. We get some panic. We're going to expedite how fast we get to zero from the Fed. We're going to expedite how fast we do QE. And we push bonds to the maximum level, which, you know, calling the exact top in the TLT is going to be tough. I think our best measurement will be to pay attention to how low, how negative does the German 30-year yield go, and how negative is Japan willing to go. And that'll give us some idea of trying to predict a maximum top on the TLT. And then you get your puking of the bond market. So it's still this tug of war between the two. You finally get the Fed raising interest rates, and then we're short both. So that's why it's been so difficult to trade these markets, because if we get a trade deal, we want to be overweight the SPY and ready for a TLT sell-off, and then be ready to flip. Now, on the other hand, if we get the trade war escalating right now, which potentially is less than, so if it's December 15th is the scheduled date, and the Fed's next announcement for change of rates is December, I got to double check, I think it's December 12th or 11th. So Trump knows that. The next meeting's not till February. So if he wants to have some really low rates by the time he's going into the election period, if he escalates hardcore now and even more hardcore in January, he could be getting rate cuts in December and February. And we may be getting out of rope within the next 3 to 6 months, which would be scary to say the least. So this timeline could be shrunk with the trade war escalating. So that's really, I really think the only two ways this plays out. Now, a lot of people have hypothesized that the SPY and the TLT could sell off, the bond market and the stock market could potentially sell off at the same time. But I don't see how that would happen without, from my standpoint, one sells off, pushes some money into the other, and then that causes the other to sell off and pushes some money into the other. But overall, they're both going down. And then finally, once the Fed finally makes the decision to raise interest rates, or even signals that they may have to, is when we would get both to sell off. Now, normally they don't want to raise interest rates unless they feel like the economy is in a strong place. So the only reason they would do that without it in a strong place would be if inflation was getting out of control, which could happen quite quickly once, once the Fed goes from $60 billion, once this money gets out of these asset classes, starts getting circulated into the real economy. Once we have all these companies who are able to sell products for little to no profit or a loss because they have access to cheap credit, they're going to stop doing that. You're not going to see companies selling stuff for free when they can't borrow money for free. So it's a train wreck coming, and this will be our best friend pretty soon here. But yeah, that's what I'm thinking we have headed towards us. So what other charts do I want to show you guys? Oh yeah, let's look at the other.
You should probably have another theory, what happens if he gets impeached, but it goes to trial in the Senate. The Senate calls every witness possible and drags it out, including bringing in all the corrupt people from the previous administration and all those Democrats that are out there trying to get trying to get the presidency. You're going to be sitting in the Senate waiting to, they're sitting on trial there.
Yeah,
And
well, you
then,
got to flip 20 Republicans. Yeah.
Really?
Yeah, well, yeah, so it's 2/3 vote.
Mm-hmm.
So
Well, yeah,
have
it won't
20.
happen. That's for sure. But
Yeah,
I think just the nightmare of what could come out, if they, I don't think they realize what they're getting themselves into, and how much more dirt's going to come out because of this, and what that's going to lead to in this country. I mean, it's
Well, I think they've been called out red-handed, so their defense is like, "Hey, you can't investigate me. That's illegal." So I think they're just trying to kind of deflect.
Yeah.
But I'm becoming very convicted in this trade. So I'm almost ready. Probably give it one more week. Might be a week late, but the big picture is this. So the Chinese have half of our GDP, but they have 10 times the money supply, which is just absolutely ridiculous. And they don't let money out. So they've been capturing all these investments, but there's no way to get the investments out. So there's all this money trapped in China, and they got so many problems. So the only thing that would ruin this trade is if they were to get a phase one deal and roll back tariffs, then they might strengthen this. The most I could see them strengthening it might be that 6.7 level. Just depends on how many tariffs are rolled back. But you saw before that phase one deal, you can see the futures market was betting heavy against the CNH, the offshore yuan, and pushed it towards that too. And then the second we got the hopes of a phase one deal, it sold off, or it strengthened very quickly. So I'm still being a little timid to put on the first futures contract on CNH to sell it. So the basic idea there is we're going to sell it at today's conversion rate and then buy it in the future exchange rate, hoping that the cost has gone down. So realistically, I think if we just do the December 15th tariffs, it's realistic to go at least to 7.2, which is where we were at prior. And that's where it had devalued to in anticipation of the December 15th hikes. It's not clear if that's where the Chinese would leave it at with those tariffs or if they would actually go beyond that. So I think from a short-term potential profit, we have at least 20 cent move ahead. But I think getting a little greedy, thinking of if they were to go maybe to 20 or 25% tariff on the 300 billion that's not currently being tariffed, then this might go up to 7.5, 7.8 in the next move. So yeah, right now I see a little bit more of a potential profit versus loss. I just want to have a little more conviction that they've given up on the trade deal. So most likely by the time I do pull the trigger, because the more speculative, aggressive investors will have probably pushed this close to 7.2. So most likely, if we do jump into this trade in the next 2 weeks, it'll probably have already moved against us to maybe 7.2, and we'll be looking to close it out around 7.5 to 7.8. And so for every futures contract, every 10 cents, just multiply that by the value of the contract is $100,000. So if we can predict a 10-cent move, that's $1,000 profit. If we can predict a 50-cent move, that's a $5,000 profit. In terms of the maximum position size, I'll recommend, most likely we'll leg into it. So we'll do one contract within the next 2 weeks. Probably not this Friday, but next Friday. This Friday, I'm going to try to get everyone a good video of how to do the trade. It's easier than doing an option caller. You just got to go get approved for the Hong Kong currency futures. But yeah, probably at a maximum per $100,000 in your portfolio, we'll leg up to a maximum position of 3 contracts. And that should give us, these moves, as you can see, they just don't happen that often. And it's typically in response to their economy really slowing down and having trouble, like they had in 2015. And they did that all to themselves. No one was applying pressure to China in that near bankruptcy. This time around, we've got a whole lot of external forces pushing it. So we've seen their response. They don't give you a lot of time. The second the tariff comes out, they very quickly change the conversion rate and reprice it. And the main thing they're trying to do is not cause chaos with all these companies in China who are trying to sell products to do exports. So they're trying to simply make the prices not change for the importers in America when they go to purchase, and they have to pay the additional tariff when they get in there. So depending on how bad the tariffs are, we should be able to get a rough gauge as to what's a realistic devaluation of the currency to offset those tariffs. And that's assuming the Chinese continue to react the same way they will. But Jim Rogers has a really good interview. He's got some good books. He worked with George Soros. I think he started to realize how wicked George Soros was, and they broke paths. But he's got a lot of good books. His interesting story is he went and traveled, I think he went to like 100 countries, him and his wife, just driving in his car. He wanted to go see the whole world. So he's all about investing in oddball places like Russia and China and Singapore. But he's also believing that this currency is going to devalue dramatically, that the dollar is going to rally. He hates the dollar. He thinks it's going to lose its reserve currency, but he's mostly all in on the dollar. He's expecting the dollar to travel considerably higher. Let me pull up the dollar chart.
Yeah, I think I saw that was your information that I had heard about years ago, about the way China's been trying to, get, and the IMF has been all over this, trying to get them into, what do they have, the special drawing rights or something. So, then they're trying to get themselves as reserve currency versus the US dollar. It's been going on for like a decade or so. I think you mentioned something about that in one of your reviews.
Yeah. Oh, yep. And that was yesterday. Yep.
Yeah.
So yeah, the Chinese do not like to see the value of their currency go down because that's something that happens to third world countries, not dominant players. So they don't want this to happen, but they have no choice. If we apply all these tariffs, now all of a sudden the importers are going to stop buying their goods because the price has gone up. So they have no choice. So there's just so much pressure for this to go to continue to devalue. So this probably be, a few times a year, as long as this escalation continues, that we'll get the opportunity to do it. So the setup's really nice right now. We got a nice sell-off. There's just some good downside risk. If they were to really do the phase one deal, part of the language that they've expressed is that they would put a peg on where the conversion rate needs to land. And so that might very well strengthen from that peg. So assuming we got a phase one deal and it did strengthen, say down to like 6.7, I would still want to short their currency, expecting that phase two will call the deal off. So I think being patient right now will help us get a better risk to reward ratio. So still holding off on that. And it's a good thing we did. We'd be down about $2,000 a contract if we had rushed into it a few weeks ago. And then meanwhile, let's look at some other things we might do. So I have been organizing these a little bit more. So this is labeled the SPY right now, and I don't see any changes in that. If we did anything extra right now, it might be some short-term positions in this. Because I think realistically a 1 month sell-off would be realistic, maybe as much as a 3 month sell-off. If we got some pretty nasty tweets and actual actions going back and forth, I'd have to look at the substance of how the trade war is escalating to try to get a feel for how impactful it will be on companies and earnings. So that's what we got going on in that position. TLT, I have 2 good short-term ETFs that we could, inverse ETFs we could play if we thought that there was a significant sell-off in the TLT, but we're ways off. I wouldn't want to jump into these until we get towards that zero bound on the Fed rate. So we can just do the inverted option collar if we think there's down move on the TLT for now. But I do have these ready for us. Emerging markets, beyond doing the inverted yield, I might put a little bit of our portfolio into Yang, the inverse emerging markets ETF. Metals, I'm pretty happy in GDX until we see GDX really get probably close to 50, maybe 40 to 50 is when I might consider looking at going for an even riskier position, get out of gold and go into spot silver first and then into silver miners. But for now, I'll probably hold this to at least 40 for GDX. The setup for crypto is getting better and better. The more of these banks print. These are all coins you can hold in Coinbase, which is the best, safest place to play these for Americans. So if you guys are interested in dabbling, this will probably never be more than 2% of our total portfolio. So it could be, a bit of work to manage these assets with 2% of your portfolio. But if you don't mind and you like to be exposed to crypto, I'd set up a Coinbase account and download the phone app and become familiar with that, with how to use that. Maybe get a little capital in there, because if we see the trade war is escalating, I think that we're going to see all the rates go quickly to zero, and this could shoot much, much higher alongside gold. So this could play out pretty well for us. The boot camp, I was starting to play with what exactly we would have in it. Probably not these. I think these are too closely correlated to everything else we have, so I'm still playing with what we got in there. As far as the trades go, the VIX trade is up a little bit. Let's see where our VIX trade's at. Yeah, so it's up what, 10 cents on 60 or 5 cents. It's up about 5 cents. So yeah, that VIX is so hard to get a spike, but I think it's coming. So yeah, we're really set up quite well. All right, guys. Well, I guess that is pretty much what I have for you today. Any questions?
You're the best, Jason. Thank you.
Oh, thanks, Oscar. I appreciate that.
I'm all good. Dan here.
Okay, Dan. Well, hey, I'm glad you got your TLT going.
Yep.
Karen, what do you think? You gonna short emerging markets or just step aside for a little bit?
Now, I'm going to wait until your Tuesday trade and go ahead and do it. I mean, I could look at it today. It's just yesterday. I could just take a look and jump into it anyway. So I might just do that. So
Yeah,
I'll go
maybe
back
wait till the information I had yesterday was everything was hunky dory with the trade deal.
So wait till Tuesday. Okay.
Yeah, wait till Tuesday. We might be ready to bet down on it by then.
All righty. I'll do that.
All right, thanks, Jerry. Anything from you before I close this out for the day? I don't think he has his microphone on. All right, guys, really appreciate everybody hopping on live with me and spending part of your Wednesday. We'll see
Oh, by
you.
the way, I did hear about your lovely city, that it was the #1 city in the country for car thefts. So watch out.
Oh gosh, Albuquerque is, yeah, it's getting more ghetto by the minute. I live up in a pretty nice part of town, but Ryan, who puts all the content together, got shot walking out of a pizza parlor
What?
from some lady. His girlfriend this guy pulls up, tells her to drop her purse or to give him her purse, and she won't do it, I guess. Runs off with her purse and then pulls out a gun and shoots Ryan in the leg. Thank goodness it missed all the arteries and the bone. He's
Holy
like
cow.
Superman. He's already doing squats every day again. But yeah, it's getting it's just a general theme all around the world is that rent has gone up, pay has stayed the same, and poor people are pissed. So I think this is
Wow.
gonna slowly bubble up on us.
Yeah. Wow.
Yeah.
Well, hopefully he'll get better.
Yeah, he's already doing 300-pound squats, so he's doing all right.
Okay. Well, I'm glad to hear it.
All right, Karen. Yeah, maybe tomorrow on the webinar.
Yeah, I'm gonna see. I hopefully I'll have the time to do that. That's what I'm hoping for. So we'll see. Trying to catch up a lot since I'm up here right now. Yep.
Okay, cool. All right. Well, until tomorrow. Thanks, Dan. Thanks, Jerry.
Okay.
Thanks, Jason.
Thanks.
Thank you.
Take care. All righty. So long.